Palantir Technologies, a leading data analytics software company, has captured the attention of investors worldwide. But what exactly is Palantir? Let's delve a little deeper into the company's history and business model to find out. Founded in 2003, Palantir has a compelling backstory. Named after the Seeing Stones in J.R.R. Tolkien's Lord of the Rings, the company has always aimed to provide clarity and insight in a world often shrouded by data complexity. Palantir's business model is built on two primary software platforms, Palantir Gotham and Palantir Foundry. Gotham, initially developed for counterterrorism analysis, is now used by defense and intelligence sectors. On the other hand, Foundry serves private sector clients, transforming raw data into meaningful, actionable insights. However, it's not just about software at Palantir. The company prides itself on its ability to provide bespoke solutions to its clients, offering a unique blend of software and consulting. This approach has allowed Palantir to embed itself deeply into its clients' operations, creating a sticky customer base. But the path to success is not without its challenges. Palantir operates in a highly competitive market, facing off against giants like Google's Alphabet and smaller, more specialized firms. As a result, the company has to continually innovate to stay ahead. Moreover, Palantir's business model is not without its critics. The company's close relationships with government agencies have raised privacy concerns in the past. Balancing the need for data analysis with privacy rights is a tightrope that Palantir must walk carefully. But despite these challenges, Palantir's future looks promising. The company's commitment to innovation, combined with the ever-growing demand for data analytics, means that Palantir is well-positioned to capitalize on future market trends. That's a brief overview of Palantir, a company that has made significant strides in the data analytics industry. But how does Palantir stack up against its competitors like Snowflake, MongoDB, and Datadog? Let's begin with Snowflake, a cloud-based data warehousing company. It's a platform that allows businesses to store and analyze massive amounts of data in real time. Snowflake's business model revolves around consumption-based pricing, meaning customers pay for the amount of data they store and the computing power they use. This model has proven profitable for Snowflake as it allows them to scale alongside their customers. However, they face intense competition from other cloud-based services, which could pressure their profit margins. Next, we have MongoDB, a general-purpose database platform. MongoDB is unique in its flexibility of data formats and scalability, making it a go-to choice for many businesses dealing with large and diverse datasets. Their business model is a combination of open-source software and paid enterprise features. This freemium model allows MongoDB to attract a broad user base, but the challenge lies in converting these free users into paying customers. Now meet Datadog, a monitoring and analytics platform for developers, IT operations teams, and business users. Datadog's strength lies in its ability to provide end-to-end visibility across dynamically scaling modern cloud environments. Their subscription-based business model is similar to Palantir's, providing steady and predictable revenue. However, the rapidly evolving nature of IT infrastructure monitoring means Datadog needs to consistently innovate to stay ahead. Finally, let's talk about Palantir. Palantir is a software company that specializes in big data analytics. Their Gotham and Foundry platforms serve government and commercial clients respectively, helping them make sense of vast amounts of data. Palantir's business model is primarily contract-based, which provides a predictable revenue stream. But their reliance on a small number of large contracts can be a double-edged sword. While it guarantees revenue, it also exposes them to risk if a major contract is lost. Each of these competitors has their unique approach to the data analytics market. Snowflake's consumption-based model allows for scalability, MongoDB's flexibility attracts a diverse user base, and Datadog's comprehensive monitoring solution offers visibility across cloud environments. Palantir, with its specialized big data analytics and contract-based model, carves out its own niche in the market. These are the main competitors of Palantir, each with their unique strengths and weaknesses. Now, let's delve into the heart of the matter. The stock analysis. When we compare the stock price charts of Palantir, Snowflake, MongoDB, and Datadog, we see a fascinating dance of numbers. Each company's stock trajectory tells a unique tale of its journey in the market. Let's begin with Palantir. With a business model primarily focused on government contracts, Palantir's stock has shown a steady performance. The company's revenue, bolstered by long-term contracts, has been consistently growing, reflecting positively on its stock prices. Snowflake, on the other hand, has been a dazzling performer in the stock market. Its unique cloud-based data warehousing solution has disrupted the market, leading to a surge in its stock prices. However, the company's profit margin ratio tells a different story, pointing towards its heavy investment in growth and expansion. Next, we have MongoDB, a company that's made waves with its innovative database solutions. The stock prices of MongoDB have seen quite a climb, mirroring its impressive growth in revenue, but it's worth noting that the company is yet to turn a profit, which is reflected in its profit margin ratios. Lastly, let's talk about Datadog. As a company that provides monitoring services for cloud-scale applications, Datadog has carved a niche for itself in the market. The company's stock has shown a steady upward trend, backed by a strong growth in revenue and an impressive profit margin ratio. While these numbers and charts provide an overview of each company's financial performance, they also highlight the different paths these companies are taking towards growth. Palantir's approach leans towards long-term stability, while Snowflake and MongoDB are heavily investing in growth, even at the expense of short-term profitability. Datadog, meanwhile, seems to have found a balance between growth and profitability. But what does this mean for potential investors? Well, it all boils down to risk tolerance and investment goals. If you're looking for stability, Palantir might be your best bet. If you're willing to take on some risk for potentially higher returns, Snowflake and MongoDB could be worth considering. And if you're seeking a blend of growth and profitability, Datadog might be the right choice. Of course, these are just broad strokes. Any investment decision should be based on a thorough analysis of the company's financials, market position, and future prospects. Remember, the stock market is a dynamic entity, constantly influenced by a myriad of factors. Through this analysis, we gain valuable insights into the financial health and investment prospects of these companies. But remember, past performance is not indicative of future results, and it's crucial to do your due diligence before making any investment decisions. So, where does this leave us in terms of investing in Palantir versus its competitors? Let's take a moment to break it down. In terms of strengths, Palantir certainly stands out for its unique data analytics capabilities and its impressive clientele, which includes government agencies and Fortune 500 companies. Their proprietary software, designed to handle complex and sensitive data, sets them apart in this competitive landscape. However, Palantir also faces its share of challenges. The company's reliance on big contracts poses a risk, as the loss of a major client could significantly impact their revenue. Additionally, concerns around data privacy and governance could potentially limit their market expansion. Turning to the competitors, companies like Snowflake, MongoDB, and Datadog each bring their own strengths to the table. Snowflake's cloud-based data warehousing is a game-changer. MongoDB's flexibility in handling diverse datasets is commendable, and Datadog's real-time tracking and predictive analytics capabilities are impressive. On the flip side, these companies also have their weaknesses. Snowflake's high customer acquisition costs, MongoDB's struggle to turn a profit despite growing revenues, and Datadog's over-reliance on a single product are all potential hurdles for these businesses. Looking towards the future, the data analytics sector is expected to grow significantly. As businesses continue to recognize the value of data-driven insights, the demand for products and services offered by Palantir and its competitors is likely to increase. However, the investment landscape is not without risks. The competitive nature of the tech industry, regulatory changes, and potential data breaches are all factors that could impact these companies' performance. In conclusion, when considering investment opportunities in Palantir and its competitors, it's essential to look beyond the stock price. The company's business model, growth prospects, and potential risks should all be taken into account. Investing always comes with risks and rewards, and it's important to weigh these before making a decision. To wrap up, we've compared Palantir with its main competitors Snowflake, MongoDB, and Datadog. We've peered under the hood of their business models, products, services, and financials. We've weighed their strengths and weaknesses in the competitive landscape, and we've scrutinized their stock performance, growth potential, and investment opportunities. Each has its unique offerings and challenges, making them interesting players in the data analysis software market. Remember to subscribe to our channel so you don't miss out on similar videos in the future. Feel free to join the conversation in the comments section below.